What's up, team, and welcome back to another episode of the Sunday Stock Show. Today I'll be talking to you guys about my top 5 picks for this week and for the week afterwards as well. So if you guys have been following me for the past couple of weeks, all of my plays have been hitting very well. If it wasn't immediately, they were slowly building up to the percentages that we talked about. All right, there were one or two of them that did sell off a little bit more, but if you caught it at the bottom, they did reverse. And as I always mention, look for those confirmations, because after that confirmation, when you enter into your trade, it runs up and you can make a lot of money. All right, so this video is for entertainment purposes only, and it's sci-fi time, so let's get into this. Today I'll be talking to you guys about, as I mentioned, my top 5 picks. I know there's a lot going on in the market. We have a lot of those meme stocks that are appearing everywhere. They're trending. They're all over social media, all over StockTwits, all over YouTube channels, etc. Everyone's talking about them, but don't forget about the core stocks as well. It's always nice to play those meme stocks because we see huge fluctuations in them. They're very volatile, of course. We've seen double-digit, triple-digit percent changes. So there's been AMC, GME, Bed Bath & Beyond, BlackBerry, Clove, Wish, all kinds of stocks, right? So the Redditors, the retailers have been pumping them up a lot. There are also short squeezes, so the big institutions are betting against it, and we're really trying to see who's going to outlast who, right? So without really focusing on those, if anybody wants to take trades on those, obviously they are higher risk trades, but we are going to focus on the core value stocks that have a lot of good fundamentals behind them, and stocks that actually have a purpose, right? Not these just being pumped up and then come crashing down. So the first stock that I want to look at is going to be ticker symbol TWTR, which is Twitter. Why do I like it? So over here, we've recently had earnings, huge sell-off because of earnings, and look at this reversal. Beautiful reversal that's coming. It's broken its previous resistance point, so it had a resistance here at about 55, then another one here at about 59, and we just continue to run. We're above all three 50, 100, and 200-day moving averages, which is very good. That's a very bullish sign, and I can see this running back up to previous trading levels. So before, Twitter obviously had big run-ups, sell-offs as well, but was stuck in this trading range for quite some time. All right, we saw it here, sold off here. This was the NASDAQ correction, and then we saw it trading here. So I can easily see this going somewhere between $64 and $68 a share. All right, it's currently at $60 a share, which gives you a really good return of approximately 10%. So 10% on this stock is a great return, and again, it is a very consistent stock. So that's my first stock that I want to talk about. The next one I'm going to go into is CHX. This is Champions. So what do I like about them? Again, very bullish over the past 6 months, really just continuously trending higher, right? We can draw ourselves out a channel over here. Clearly the channel is bullish. Whoops. Connecting the higher highs and higher lows. So here we have the peaks and the troughs, and clearly every time it hits a new high, it sells off, new high, sells off. I talked about this one a couple of weeks ago, and then of course it did run up very big. Here we are selling off. I'm not necessarily saying that this is the perfect entry. I can possibly see CHX come a little lower, somewhere at around $25 a share, all right? It has a very strong support there. This is also its previous resistance, which becomes a support. So I could see it maybe coming down a little more, but it may also continue to run. We see a few greens here popping up, a couple of green candlesticks showing signs of a reversal. All right, so if you want, you could wait for it to cross 28 as a confirmation. If not, and you see this sell off a little more this week, I could see it coming down to about 25, 24.50. It's going to hit its support and then start to reverse back upwards. So previously we have an all-time high, a 52-week high over here of about 30.50, so $30.50. I could see this running up higher than that and going to approximately $31, $32 a share, which gives you, again, a nice return of approximately, right there, about 15%, 15 to 17%. All right, so that's ticker symbol CHX. The next stock that I want to take a look at is going to be ticker symbol NVRO. This is NVRO. All right, why do I like them? Let's back out a bit. Again, this is on the 6-month time frame. They have been a bit in a trading range, so nothing extremely bullish. If we go back and look at them, they were very bullish, then they sold off a little bit and seem to be struggling a little bit in this pattern here. But we don't have to go for an extremely aggressive run. We can just catch this run up to here, all right? So we see here, it's begun to already reverse. We've broken the strong resistance points. It had a very strong resistance point right here. All right at about 154, 155 a share. We broke it and closed above that. We closed at 158 on Friday, showing signs that we've confirmed that reversal and it's going to continue to run. Of course, if you see this coming down, then you can expect it to probably come back down to about 140, 145 a share. If it continues to run, I could see this running back up to about 175 a share. All right, that is a great return of approximately 12%, 11.50 to 12% on $158 stock, especially with options. That will be printing you money. The next stock I want to look at is TUP. That's Tupperware. All right, they got brutally damaged during COVID and then have ran up extremely well. So people obviously need their Tupperwares while being stuck at home during the COVID pandemic. So what do I really like about them? Well, they have sold off recently because of earnings as well and are now stuck in this trading pattern. So it's very clear here as to where the support lines and where the resistance lines are. They have a support here at approximately $24 a share, and they have a resistance here at approximately $28, $29 a share. We've seen it bounce multiple times over the past couple of months. Here we're touching the support line and we've started a little bit of a reversal. It closed on Friday at about $24.49, let's say $24.50, and we are starting to reverse back upwards. If you wanted to look for an area of confirmation, where should it hit until you enter into your trade? Well, you can be looking at something at around $25, $26 a share, or if you want to be even more conservative, you could push that up to about 27. All right, those would be my entry points for this, and I would be running this right back up there to about $28 a share. That gives you a nice return, again, of approximately almost 18%. So that's ticker symbol TUP, Tupperware. And now lastly, the stock that I want to take a look at is FedEx. All right, FedEx always does very well and has been doing very well, especially due to COVID. We know that there's been a lot of deliveries. Everything is online. We've talked about the online e-commerce businesses and industry as well. If you haven't watched that video, it's in the channel as well. It's going to be my top 3 e-commerce stocks, which you have to go take a look at. It's very interesting. I'm not just talking about Amazon. We're talking about the underground, up-and-coming e-commerce stocks. So FedEx obviously works and builds off of that. They're the ones who deliver the products that you order online. FedEx and UPS are very similar. They are basically parallel stocks, but today I'll be talking to you about FedEx. Why do I like them? Well, again, they've recently sold off and they continuously keep going to new highs. A new high here, sell off, new high, sell off, new high, sell off, and it's found itself a support here at about $290 a share. All right, it looks like it's beginning to reverse back upwards. And if it is to run up to a new high, well, we can be expecting anywhere from 8 to 10% return. The only thing you do have to keep in mind is that they do have earnings coming up, and earnings can often act as either a positive or negative catalyst. FedEx sometimes sells off on earnings day, but what they do very well is that they run up prior to earnings. So 2 weeks prior to earnings, they run up on average in the last 4 quarters 4%, and 2 days prior to earnings, they run up on average 5%. So very good movement. It looks, when looking at it with technical analysis, it looks like it is going to run up again until they hit their earnings, which is on June 24th. And it looks like it will run up till earnings. How will it perform on earnings day? Well, we will see that in the coming future. However, I do see this running up and probably coming up to about 315, if not going to a new high before the earnings. So keep those 5 stocks on your watch list. I think they are going to perform very well this week and into next week as well. As I mentioned before, if you haven't taken a look at my other videos, please go and watch them, because the 3 undervalued e-commerce video is a golden one, and you can definitely make a lot of money with that in the long term if you want to be well positioned. All right. And if you like the content that I've been making, the content that I've made in the past, and you want me to continue to do so or make any different kind of videos, it's much appreciated by the Sci-Fi team and myself if you can like, share, and smash that subscribe button. As well as, if you haven't joined our 10x challenge, we just started that this week. We are doing great, and please come and join our team, and we will 10x your money. Whether you're starting with 1,000 or 2,000, within 50 days we will have 10x your money, and that is a guarantee. So let's have fun, and let's see you next week. Have a good one, everybody.